All right, welcome back. We finna go at it again. All right, another dismantling diamond news. Let's go ahead and get it started. See across the board here. Today is June 10th, June 10th, 2021. All right, and the time is 3:55 in the morning. All right, and let's look at across the futures markets. Okay, you see a little bit of a mixture here, mostly down. S&P down, Dow is down, up. Nasdaq is futures down, and Russell 2000 is they're looking down. All right. Three out of the four major indexes are down. Let's look at that 10-year bond here. Look at 10-year bond at 1.4890. It's under 1.5 for a while. So keep an eye on that one. That's very important. All right. See the VIX is running a little bit high. Get into the foreign currencies. The GDP to the US dollar is down. The US dollar to Japanese yen is down as well too. All right. Oh, let's take a look at some of these cryptocurrencies before we get into the other markets. Look at that Bitcoin. Bitcoin is at just about 30, a little bit over 36,000, scratching, trying to get above 37,000. All right. CMC crypto is just a little bit about a little bit under 1,000, trying to get above there. All right. Look at that FTSE 100 as well. FTSE 100 is running down, is up, and the Nikkei 225 is up as well too. Right. So that was brought to you from YahooFinance.com. All right, and let's get into the precious metals market. All right. The world spot price. Look at that. All right. Uh, Gold is down all across the board is down. All right, you see gold down, silver, palladium, palladium. Rhodium is down all the way from the high of almost $30,000 an ounce to about 21,800 an ounce. All right, look at that ratio, gold ratios. All right, still hovering around at 68 ounces per ounces of silver to 1 ounce of gold. All right, we look at that platinum and palladium as well too. All right, so that was from YahooFinance.com. All right, so let's get into some actual news as well as too. All right, see, look at here from ZeroHedge.com with Fed's reverse repo hitting a half a trillion. Wall Street scrambles to figure out what comes next. All right, now every single night the banks are going back to the central bank of the U.S., what you call the Federal Reserve, and borrowing more and more money, saying they need this. So it's just about hitting $500 billion every single night. All right, that's what they mean by hitting half a trillion dollars. That's $500 billion. The banks, some of the smaller community banks, even some of the credit unions are having to go to the Wall Street, go back to the Federal Reserve, and ask for money. All right. So that's what it is when they say Wall Street. That's the big banks and the big banks and anybody who can go to the Federal Reserve's repo window and ask for money, and so they can try to get through the next day's business. All right, this is happening every single night, not every week, not every quarter. This is happening every single night that they're having to go back to the Federal Reserve and ask for $500 billion in liquidity, which is mean cash, so they can actually get through the next day's business every single night. All right, they're having to do this. All right, so that means that they're having nightly meetings. They get their 4 o'clock talking points. Their meetings where they're having to discuss, hey man, how can we get some more money out of the Fed? And the Fed not wanting to be the take the blame. They're giving them the money and saying, okay, we gave you the money. What are you gonna do about it? So the Fed is actually on the onus of throwing it back to the major banks on Wall Street, and their ultimate goal is to be the buyer and lender of last resort. All right, they want to own everything. So that's what's going on with that article right here. If you look see by the reverse repo, all it means is that their banks are going back to the federal. They're going back to the Federal Reserve, the central bank of the Republic of I'm sorry, the United States of America Corporation Inc. and asking for more and more money every single night. All right, $500 billion every night. Or imagine that you going to the bank, you going and getting $500 billion. All right, that's some our debt is unsustainable. All right, all right. This is kind of a new one here. What we want to go look at here. All right, get that little camera view a little bit closer. Want to take a look at something about these home prices. All right, so this is a year. This is a yearly chart beginning in about 2006 about home prices. All right, new medium home prices, existing home, new sales, new housing starts, and existing home sales. All right, if you take a look at new existing home sales, For the medium house for a home in 2006, it was 238,000 and change. All right. Now over time, that is steady increased. All right. Exception of the 2000, the housing crash. The housing crash in 2000. When the housing crashed in 2008, it actually crashed in 2008, but it took effect for the housing to drop down. All right. This was new medium home sales. You see it drop down, then it slowly picked back up at the height of 2010 is when it hit rock bottom. All right, that's for new home sales, and then you see existing home sales drop down to a that's medium across the U.S. All right, 172,000. All right, so if you want to get into a housing market, 2010 was the best year for those you who were in the housing market then. All right, and then new home sales for the annual rate. If you take a look at that, at the height 2006, depending on what part of the country you in. All right, so you get the kind of idea with a lull of rock bottom of this area right here, new home sales annual rate. With a low, it dropped down to its lowest mark in about 2011. It stayed kind of low. All right, new housing starts, as you can see, and then you go all the way to existing home sales rates. Again, with the height of 2006, and then hitting a low between 2009 and 2012. All right, and then we get back up. All right, but if you come down here to 2021, look at this across the board. All right, and then you get to this final article right here, final one: existing home sales annual rate, 6,135,986. All right, that is a big jump. All right, this is real time totals, existing home sales. All right, so in total 2021, if that number here, that means over 6 million homes, homes that already exist have been sold. People are selling their homes, trying to get a profit off of it, trying to get out of certain areas. And then you got to make the mass exodus from the major cities, and trying to get home. People get homes. All right, some homes even started fixer ups and selling for $400,000 to $500,000 over their market cap. All right, that's kind of unsustainable. All right, so go and take a look for yourself. This is another site, another avenue you can look at usdebtclock.org. All right, that's from usdebtclock.org. Okay. All right, and another one here that most people don't realize what's coming. Pay attention to what's this coming. It starts in June. All right, this month. It hit at the end of this month. All right, Basel 3 new and the new rule for gold. All right. So kind of highlighted a section here down here. All right, these are the rules at the end of June for the European banking system, which will adopt the new Basel III rules. In short, the incentive to have exposure to gold as a pile of credit will go away. All right, if the banks can't use any of that as part of their reserve calculations as their available stable funding. All right, moreover, the physical gold they hold will be held at a 15% discount. Bottom line, these rules will make it impossible for the LBMA, that's the London Bullion Market Association, all right, member banks to hold any exposure of unallocated pools of gold derivative futures and swaps on their balance sheet. If that means if they don't have it, if they don't have the physical gold in their banks, physical gold, that means you can touch it with your bare fingers, all right, then it don't count. Don't mean anything anymore. You actually have to have the physical metal. All right. It will force a liquidation of the positions at the end of fractional reserve leveraging of gold used to suppress the price. I read that again. It will force liquidation of those positions and end any fractional reserve leveraging of gold used to suppress the price. So all this other crap they've been using to suppress the price of gold now goes away. All right. It will completely go away. And the end of June is coming up very soon. All right, we're June 10th already. All right, just about the halfway part of the month of June. All right, so when this article is getting in now right here, the Basel III rules are kicking in. About from the BIS, the Bank of International Settlement, and starting with the European markets, they can't do any more funny business with gold. If you don't have the gold inside your banks, your storage units, guess what? It don't count anymore. You can't suppress the price by using fake ETFs, paper contracts anymore. You don't have the physical metal, you don't have it. Sucks to be you. All right. So get this article again. This is from thefallingdarkness.com. All right. Thefallingdarkness.com. All right, the Basel III rules come into effect. All right, and if you just in case anybody tells you that well, we don't know about the Basel III rules. They've been knowing about the Basel III rules since 2010. All right, here we go right here, and this will be our final one for the day. All right, countdown to Basel III. All right, the deadline for community bank compliance was January 1st, 2015. So community banks just about had almost 6 years ago, to get into compliance with the new Basel III rules. All right. This is from the banker communitybankers.org. All right, they have their own website, www.communitybankers.org. So the community banks had almost 6 years to get in compliance with the Basel III rules. So if you go talk to them about Basel III and they tell you don't know what it is, we're still trying to implement it. They had a deadline of 2015 to get into the Basel III rules. So that was up to them. They failed. If they fail to get in compliance with the Basel III rules, that's their own fault. All right. So that being said, I want to thank you for joining us in another edition of Melanie Gama News. Be safe, be sound, and as we always say, you are your own best financier. You're your own best banker. You're your own best savings and loans. You're your best credit union. You're your own best financier. Get that barter system started with your neighbors. The neighbors together for the whole community. Barter system can reach out to other communities. Everything starts local. I want to thank you for joining us in another edition of Melanie Gama News. And as we always say, be safe, be sound. Let's get it started.